Let me give you a real life scenario on how a property of say 50 to 100 million is actually financed leveraging on mortgage. You want to buy a house, you love this house, and they're telling you the price of the property is 100 million, for example. Then you're thinking, I want to leverage on mortgage. So what mortgage does is this: that property of 100 million, mortgage gives you 70% financing of that property, meaning the bank will give you about 70 million. All you have to present to buy that house completely is 30 million, which is like what the equity is required. Sometimes if you're using MREIF, it's like 10% of the property value. If we're leveraging on private mortgage financing, that's about 30%. Or let's say 100 million, 30%. You provide 30 million, right? The bank gives you 70 million. Now, for the bank to give you that 70 million, what are they going to look at? Your income structure. If you're a salary earner, how long have you been working with, say, the company you're working with? How long have you been working with them? But more importantly, how long do you typically work with any organization that you're working with? So they want to see how consistent you are. That's number one. The second thing is, how much do you earn? For that property of 100 million, because your income, what the bank will take is 30% of what you make on a monthly is what will be calculated. Minimum of 30% is what will be calculated as your monthly payment on your mortgage loan, right? And you'll be paying back that, you'll be paying 30% of whatever you make monthly for the next 5, 10, 15, 20 years. So they are looking at, if you are going for a property of 100 million, how much do you make on a monthly? What's 30% of that? They'll run the math to see, okay, you qualify. So if you qualify based on your income structure, the next step is your documentation. Are all of your documents available? What documents do you need? Your employment letter, your national ID, your offer letter for the property you also want to buy, the document. Most of the time, properties we see has an 80% chance of qualifying or having mortgage approved. Anyway, so your income structure, step one, your documentation, step two. Once all of those things are checked out, it's very simple. We then open an account for you with the partnered bank. They fund it within 2 to 3 weeks of your approval being done, and then you take that money and buy that property outrightly from the company you're buying it from or whoever it is that you're buying it from. Boom. And then the rest is what your payback tenure. You start paying back what you're supposed to pay back on a monthly basis for the stipulated duration. Very, very easy. And the advantage of that is, now for that property of 100 million, the bank is giving you 70 million. That's you having 70 million free for yourself to still do other things you want to do. Maybe you want to renovate the property. 70 million free from your own pockets. You are not so financially constrained anymore, because typically what we hear is my capital, all of these things. So that's what mortgage does. And also, yes, there's interest on the mortgage, but that property of 100 million, if you buy it today, in the next, say, 5 years, is now valued at, let's say, 150. And remember, you are paying back your mortgage in the next 10 to 15 years at a fixed interest rate. So now, in the next 10 to 15 years, you're supposed to pay back on a 100 million loan, or 70 million, right? Because they'll give you 70%, 70 million loan. Now that property is for 100, but now in the next 5 years is now valued at 150 to even 200. So that's what they call refinancing. So some persons can now sell off the property. You've made profit though. Remember, you've made profit. You cover up on your financing, on the mortgage, right? And then you are left with the rest. And if you're able to complete your mortgage payments soon, that increases your credibility and gives you more access to more money. And remember, you're doing all of this, it's your own house. Your family can be living in it. If you want to use it for short let, whatever it is you want to do, no problem. What the bank is concerned with is that you bought it outrightly and you are paying back on your mortgage. Anything you want to do with the house is fine. The house can now still be the house itself can still be paying back on that mortgage that you've applied for. So there are lots of beautiful ways to leverage your mortgage. Step one is to take our free mortgage prequalification test. That's all. It's free, right? So send a DM, drop a comment, or call the number on your screen, and then we get you started. Stephanie. So I look forward to seeing you at the back end. If you have any questions, like I said, leave it on the comments or call. I'll speak with you one-on-one. So, peace.